Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today I've just got the NAS 100 up on the screen, just my favorite indice of choice in order to check out the a correlation between stocks and Bitcoin. Of course, Bitcoin is highly correlated with the stock market these days. It does not trade independently, and so it's very important to understand what's going on in stocks. Some people might use the S&P, others might use this or that index, but I prefer the NAS 100. Of course, we do see that we had a breakdown. I was warning you guys about a day and a half ago, not sure exactly, that, of course, Jerome Powell would be speaking and that things could go a little haywire depending on what he said. We did get him to state that the Fed, in fact, is keeping 75 basis points as a possible adjustment to interest rates on the table, which he previously had denied at the last interest rate increase, where he said that they'd be limited to 50 basis points. So 75 basis points was not factored into the economy or into the market rather when we have been seeing these crashes. In fact, that's quite higher than the 25 basis points that we started back in November, I believe, when we were first starting to talk about those things. And so, the market is having to come to terms with the reality that we do have inflation, which is just plaguing the bottom lines, that people no longer are interested in speculating because they don't have free money in order to speculate. They want to be in assets that have strong profit and loss statements. And of course, those statements are being affected by the inflation, which the Fed hasn't been fighting hard enough. And so the Fed has started to realize that they need to fight harder against this. Jerome Powell has come out and said, okay, like he's turning away from the stock market and he's now going to just solely focus on getting inflation under control. That's going to be his one and only job, to get inflation under control. Previously, his number one job, and literally the only thing that he was doing in his job practically, was trying to pump the stock market. And so we've gone from pump to dump. So thank you, Jerome Powell. You're the ultimate pump and dumper. Of course, we are nowhere near our all-time highs, and there is a lot of room to continue this fall, whether or not we do get a pump that might be along, one of these trends that we're creating. Not sure. Nobody can see into the future, but could we potentially get a pump, you know, that would be a pretty good run? Yeah, it's just that the Fed won't give us the chance. And so they don't want the economy to heat. So every time we get a little pumpiness in the market, they're probably going to throw something at it in order to cool down the economy so that inflation comes under control. There are other methods of fighting inflation. Of course, you could increase taxes on corporations, but that's a duty of Congress. That's not something the Fed can do. And there are other things like, for instance, letting more immigrants in the country. Do all of your friends have 3 children? Do they have 2 children to replace the mom and dad? And do they have a third in case one of their children gets sick or disabled or has, mental health issues or otherwise can't contribute to the economy, or perhaps, God forbid, dies? Well, if all of your friends don't have 3 kids, who are married, then of course we're not replacing the population fast enough. We need immigration. And if businesses are rapidly increasing because of the efficiency of the US market and perhaps other markets around the world, then they need more workers in order to fill that new capacity. And if you can't fill that capacity, then of course they have to pay their existing workers more and more, and that just contributes to massive inflation in wages. Right now in the US, there are 2 jobs for every one worker. So if you would like to have 2 jobs, you could go get 2 jobs, but probably you only want one job. And so this isn't an ideal situation. We need more workers. Of course, closing the borders hurts that. While it does pump up wages, which is good, but it also contributes to inflation, which makes those pumped up wages worth less. And so this isn't a great relationship. It seems that all of those wage increases are primarily targeted at those in the finance industry and those with really high end white collar jobs, while the blue collar jobs, as usual, get the shaft. And so we're not really seeing the benefits of what Bernie Sanders and Donald Trump, who happen to be on the same page on this one, wanted when they wanted to, pump up the wages of American workers. It seems to have come around and bit us in the butt. I'm all for unions. I think that's the right of Americans in order to, negotiate with their employers. I'm all in favor of, making sure that Americans can get jobs first, as opposed to just giving away, jobs to, foreign markets and outsourcing or letting immigrants replace Americans. But the one thing that we can't do is have open jobs that are not getting filled because there's just not enough Americans in order to fill those jobs. Like, what do we do? Well, we have to bring in immigrants, or we have to set up operations overseas where there are lots of people. And both of those things, have trade-offs, which, you know, um, you have to put it against inflation. Do you like inflation, or do you like, those other situations? So, we're really caught in the middle of all of this. Just like the stimulus packages, we like helping people when there's like lockdowns and there's like global medical, health scares. We don't want people, getting sick and having no resources or not being able to go to work and not having any resources. But at the same time, if they're just throwing that money into speculative assets like the stock market or crypto, what can happen is that a lot of it gets captured by, scammers, by, pump and dump schemes, and also it just inflates a bubble that then burst, which is what we're seeing with like those meme stocks and with a lot of the technology sector in general, where people were speculating on the future but they didn't really have any profit and loss that corresponded to what was being speculated on, right? Like how much money does Bitcoin make in the economy? How much money does, these different assets make? And if you can't really answer that with a clear, definitive answer, if you don't really understand how these things are contributing to the economy, then it's pure speculation. It's basically a giant, expensive lottery ticket, and that's the bubble that is bursting. More locally, like just on today's news, of course, I was pointing out, that on the 6 hour, we had a whole bunch of gaps. Of course, we did fill the one here, which was good. That was kind of like our little stretch. And then we just like fell down and filled the gap that was at the lower end. So we now have reached my bottom target. I'm not sure if we're going to hold support here. I did notice that the Russell has not filled its gap yet. So perhaps the markets continue to kind of push down until this is filled or until we maybe perhaps double bottom and create those W formations that I was talking about, where typically if you can make a W, you can get a nice lift off of that. And then perhaps try to fill some of these like upper gaps which exist on a whole bunch of these charts as well, right? So just maybe form a nice W and then perhaps we get that bounce that we were looking for. The one thing that I did want to warn you guys about, and just to continue going on, and by the way, we were just looking at the S&P 500, that's this one, and prior to that, the Russell 2000, and prior to that, the NASDAQ, or the NAS 100 rather. Volatility has spiked, so today has not been a great day for trading. You guys probably noticed that. That was the warning that I was going to give you, that most likely Jerome Powell was going to say something that would either spook the markets or it would send them into a corrective posture and anyway would increase volatility. And since we're in that area, this is kind of the line in the sand where anything over this is extremely bad trade for trading. and in this zone is really not good in the middle here. And then only if when it's really low like this do we have good trading, which, by the way, that's relatively high compared to some of the volatility that we've seen in the past. So there's even a lower level that's possible. It's just that things have been so crazy since COVID that we can't even talk about those super low levels, right? But the reason why this kind of second level up is the Goldilocks zone is because a little bit of volatility is great for trading. Like you want prices fluctuating because that does give you, room to make money. You don't want things just super predictable, you can't make money. But at the same time, you don't want it so volatile that people are just afraid to trade. They don't want to be in the market. They don't see it as reliable, right? This is kind of the thinking there. The DXY, the dollar, did have a very nice correction, and now we are in that consolidation area I was talking about. Hopefully, we just get some sideways action from the DXY, the dollar, and so maybe some of the markets that have been hurt by the rising dollar's strength, because the dollar has just been very powerful. It's probably been one of the most powerful things in the market these days, and at least relative to the currencies that its basket compares it to, such as the currencies of Europe, etc. And that's just had a suppressive influence on some of these markets like crypto and the stocks, and then some things related to, of course, trade. And so let's see, let's move along to Bitcoin. So Bitcoin, of course, did put in that kind of turnaround that I was warning was likely to come with whatever Jerome Powell said. And so go ahead and check out my last video if you didn't see my warning about that, but it was pretty clear. It didn't mean that he had to totally disrupt the market, and we're seeing kind of a middling right now. It's not really the worst, but it doesn't look great. I did notice that this head and shoulders formation was put in, and so that could potentially bring us lower, perhaps like a 28,000 or 27,500, just if we go from the technical measurement of the possible breakdown. But if there's some front running, then perhaps we've hit a low. You can see on the NAS 100, which of course is the index that I love to follow, that we are at support right now. If that NAS 100 does break down, then I would expect Bitcoin to come down as well. But right now the NAS is holding fairly well, making kind of a higher low, which is a good thing. But if it does come back and perhaps make a double bottom, or God forbid, break down even further, then Bitcoin absolutely will follow suit. Bitcoin is basically just a tech meme stock at this point, and there's no reason to think that it's trading on its own. It's trading with stocks. So in that case, my first target, if it does break down with the NAS 100 to the next support, I would expect that to be that $27,500, $28,000 level. And if the NAS 100 loses that critical support, in other words, if it loses two supports, then I might even suspect that this kind of bear flag pattern here ends up playing out. And so the measured move of the flagpole, just bring it down. And, it could be anywhere. It's these things, this isn't a perfect science. It's just, economics is a social science. It's not a physical science, right? And so it's all human psychology. Who knows how these things can get front run, and what people will think when we do have this crash. It could go deeper. It could be more shallow. But just like I said, the measured move just coincidentally would end up at 23,000. I was saying that's probably one of the buy areas that I would have set up in my mind. Let's see, on my Alpha Origin channels, we're right there at that support, right? Let's just look at that. It bounced right off my support. I'm not sure if you guys can see this kind of midline that I have here, but right there, see that? and it bounced right off of that, right there. So that's telling me that this theory, this concept is working really well because we got this bounce, this bounce, this bounce right on this diagonal line. And then we did like have a dramatic fall, and so we wicked down, but we did find support on this line right here. And then of course we're breaking down just to that line. I think it would take a significant amount of energy to push us down. But in other words, you can see that this setup is very similar to what we're seeing on the NAS 100, right? Where we could break down one, and then perhaps we could break a second one down, right? And let me go ahead and put my buy boxes. Look at that. This bear flag would take us right to my third DCA zone. How about that? So for me, I think that this would be an ideal situation. This would be a great level to DCA in. I think that we would get to a certain area where there perhaps would have to be some significant bounces in the market because just everything's going to be so oversold on stocks and on crypto that we're probably going to have a nice run. I don't mean like an all-time high or anything, but maybe a nice run. And then perhaps later on, perhaps in June, depending on the news with the Fed and the CPI data, et cetera, perhaps we do visit these lower levels, perhaps something around 20,000. Although, just on a very um, middle kind of interpretation of the market, I would suspect that 22,000 is a great value. Anywhere 20 to 22,000 is a great value. But realistically, I think without manipulation in the market, I do believe, and a lot of people will disagree with me, but I do believe that an honest fair market value for Bitcoin is between $8,000 to $14,000. And so I will keep this range open just in case that this is the year that the market becomes super honest with itself from all the bubbles that have been being propped up over the last 10 years. And Bitcoin has been part of that bubble the entire time, right? So don't get misled because Bitcoin, by looking at Bitcoin's past, because Bitcoin has never had to really deal with an honest market. It's always been in a favorable market where the Fed pumps things up into this massive bubble that we've seen just blow up, have some run back, and then blow up again. And so could we come back down to this like green, like fair value level? I think it is possible. I think we're going to find out a lot of stocks, and Bitcoin will follow, the crypto market will follow if the majority of stocks, if the overall indices like fall back to their pre-COVID levels, which would be approximately here for Bitcoin, that would be approximately $8,000 to $10,000. I think we're going to find almost all stocks eventually, as the Fed fights inflation, eventually find their way back to the pre-COVID money era, right? Before that bubble was created. And if we do, that's just going to be an extremely great value. That's going to be the value of your lifetime. These levels up here are nice areas, really good relative to the past cycle, but it's not necessarily the bottom. Okay, it's not necessarily the bottom. This area right here is the true bottom. And so you can see, like, as we appreciate, that's pretty reasonable. Okay, that's pretty reasonable. So, again, I'm not expecting that to happen right away. Maybe we have a run before that, and then later in the year, if inflation isn't getting under control, then the Fed perhaps gets, tougher and tougher policies, which suppresses the speculative markets like crypto and tech stocks even further. And then that might just bring us down to those levels later in the year, perhaps summer or whenever, right? As for now, I do think that this $28,000 to $22,000 level, perhaps 20 to 22,000, that these are really reasonable prices while there is still that kind of bubbly money in the market, right? And perhaps if the Fed does get inflation under control, and perhaps June or whatever, we do see the numbers significantly improve, then perhaps that's going to just be our bottom, right? Because if things start improving for inflation from there, then they don't need to get harder, and it's not going to push us, they're not going to push us back to pre-COVID levels. But if they think that the market is just super overheated still because of all that free money from COVID, then the Fed will absolutely push us back to those pre-COVID levels. And it's reasonable because, the markets can stand on their own. They didn't need the government support anymore, right? Like that government support should have been shut off, approximately, the last quarter of 2020, right? Like there's no reason for all these markets to just like skyrocket with all that Fed money at the end of 2020, right? And so the Trump administration, when Jerome Powell was in power then, he should have shifted back then. He should have shifted back then. Yeah, absolutely. The world needed help from March until, we could even say until November, okay? Like give him a solid 6 months of credit. Like that was the right thing to do then. But he should have shut it off in November. And the fact that they didn't is just an absolute scandal. Just an absolute scandal. This stuff should have increased organically. Instead, it just skyrocketed with free like money, and that's just disgusting. We're all paying the consequences now. So yeah, um, on a fair trajectory, just from that point, that would actually be in that $25,000 area. Like if we just use the diagonal from that point, but of course, we know that there's no such thing as, just one price, right? There's going to be a huge area. And then, of course, market conditions have actually worsened. Like the market was very healthy and robust. Like everybody wanted to, go out and do everything, right? Like it just, they weren't allowed to. Like the market was in really good shape. It's just that, during those Trump years, everything had to be shut down. Um, that's the decisions that they made in almost every country in the world. And to be honest, both political parties in the US, like it doesn't matter which state you were in, you were affected by all of this. And it's a shame because it did hurt the market. And now we're in actually worse economic conditions and paying for everything that was decided back then. We're paying for it now. And so conditions are a little worse. That's why I can say that perhaps we're going to go a level lower, for example, like 18,000 or perhaps even 12,000. I just don't put it past um, the range, the range of the market to overcorrect or to fall into a recession or to fall into even stagflation, right? Um, as we grapple with all of these things. And so that can push us into kind of this hole that might become very difficult to get out of. And I'm not saying that will happen. Like nobody should be operating on, you know, terror of that or fear of that. I'm just saying because there will be bounces along the way. I'm just saying that I'm going to keep these pricing levels open. And of course, I don't work just on horizontals. I work on diagonals. So for example, if my price is $18,000 here, right, like where we are right now, then for me, that actually means, that I'm going to be tracking that price up, right? So if it takes several months or if it takes half a year or whatever to get to there, the price actually slowly rises over time. And so if I'm talking about 12,000 right now, just as a hypothetical, then you can see it would actually be, closer to 20,000 by the time the end of the year or the first quarter of next year rolls around, right? Because we don't know how long this bear market could last. And it's only if we had like a major crash, which I don't think is going to happen right now, that 12,000 would be in my mind. In reality, as time goes on, these prices will be rising according to their diagonal, just like over here, right? So you can see even this buy box was a diagonal that ended up being a super great value. You know, that 2018 crash ended up being on a diagonal with the COVID crash later on. And that level would have been, you know, a very good value. So these diagonals are important to keep into consideration. I'm not just targeting one number specifically, but a range that kind of increases over time. You understand what I'm saying. Not going to go too much further with this. Again, I showed that we do have some support on the chart underneath us. And if we close the day, which let's see how much longer we have. We have 5 hours left in the day. If we close the day under $29,100, I think we are going to be in a little bit of hot water for Bitcoin and, of course, the rest of crypto, as Bitcoin is the leader. If we close the day under, this kind of wick low here, probably we're going to test the range lows, and the same thing with the stock market. If we break down any further, we're probably going to end up testing the bottom of the range underneath us. And so this isn't an ideal position to be in. But, as far as if we have any indication that we could catch support, it might be at least optimistic that we could test the range high if we are able to hold on to that support. I'm not sure that that's necessarily going to happen. For me, it's not looking that great, to be honest. Let's see here. Yep, so I wanted to show you how we both had this upward channel, and then we also had this downward channel, and we never really cleared that downward channel, right? You can see we just kind of stayed in it. And the bottom of that channel, oh, look at that coincidence. It just so happens to line up with the measured move of the head and shoulders of the upward channel, right? And so this breakdown it just has multiple confluences that perhaps we're going to see the bottom of this channel. And then maybe we get some bounce from there. If we can't somehow get above these areas and take out this high such that we can continue to go, then most likely we're going to continue to break down. One reason I can say that, as I've mentioned to you several times, I don't like the look of the weekly. This doesn't look anywhere near healing. Um, you know, I've compared it to 2018. It looks bad. I mean, this thing is saying that it needs to be above 36,000 in order to even begin to look bullish for the Stoke. And yeah, I mean, my other indicators pretty much agree with that. Some of them saying we continue to fall even if we're at 31,300. So, maybe 31,500 at a minimum is like the first step that we need to get to. And then we would have to quickly get to 36,000. And it just seems unlikely that we're going to do that. This is a very ugly market, and it almost looks like it wants to come down as fast as it went up, right? Like, not good. But, if there is a bounce along the way, then hopefully we can get some relief. Just, it all depends upon how these daily closes. And let's see here. we still just barely have the case for a bullish setup on the daily. Just barely. Yeah, we're getting some mixed indications. 30,500, 29,100, 28,500. So there's a pretty big range there. It looks like, yeah, I mean, if we could get up to 30,500, perhaps we could just say that we're on solid support, right? But overall, it looks like, being underneath 29,100 suggests that we want to go lower, okay? And what is this right here? 28,600. If we take out 28,600, probably, we're just doing that. We'll be in the middle of that move. We haven't looked at the monthly for a long time. We did get a nice bounce on the monthly, but of course, this just looks horrific on the MACD, as I've been showing you for a long time. Even back here when we were in the green, we actually are looking pretty bad now. And this is just a free fall. And we are getting very close to the bearish control zone, even on the monthly, which, since 2015 has only happened once in 2019 at the bottom of this major, major fall, right? So again, it suggests that that 2018 scenario could be playing out where, who knows? Who knows? Could it be here? Could it be here? That would pretty much be the bottom, right? Could it be in this middle area? We don't know, but most likely something like this is playing out. We'll get a major bounce and then perhaps some type of correction, and then it could take this whole process could take a couple years until we have a next really good bull run, right? But in the meantime, you're going to have a zone where you can accumulate some of the best projects at the lowest prices that you could conceive. And as long as you're willing to hold on to those things, then you're going to be in the money for the next, the next bull run. But yeah, guys, wish I had better news, but at least we know that the Fed wants to fight inflation and that it has some focus. It's giving clarity to the market, which wasn't there before. And markets tend to react positively to that. So that could actually offer an extra layer of stability that is very hard to, really price in or really to predict what it's going to be. But the fact that the market can finally say, okay, we know what the Fed is doing, as opposed to the Fed, trying to do 100 things at once, then they can start to price this stuff in. And if we do have another major dip, maybe it could be the last one. Just, it could be the last one because the whole market knows what the end objective of the Fed is now. They've stopped jerking us around. Business loves stability, business loves clarity. And, as a business, we can plan around knowing what they are doing, as opposed to them just saying, oh, maybe we'll do this, maybe we'll do that. Now, they are still doing that to some extent. And for example, we don't know what they're going to raise in June. We don't know what the CPI data is. The things that would really put the floor on this market is if we get peak inflation, where the next CPI is significantly lower than the current one. And if the Fed does increase rates higher than what they did this last time in May, because then we would know that the Fed has the interest rate hikes at the right level in order to bring inflation down. And inflation would be slowing or decreasing, which would mean that we now have all the confirmations that we need to be able to predict the possible behavior of the market as the Fed continues along its path, and some projections could be made. What would not be good is if the CPI data showed an increase in inflation, which means that we have no idea what the sky's the limit on what the Fed might do for interest rates. And so that would be kind of disastrous. That could trigger perhaps the next fall down if we don't have it soon, right? Like if we just go sideways, then the next CPI data or the next Fed interest rate hike without the confirmation of peak inflation, either of those things could cause some unpredictability in the market depending on how they handle it, right? So, okay, guys, that was your alpha for the day. Stay safe and happy trading.